No worries. Thanks, Tim. Hello, everyone. Yeah, Webcentral is, I guess it's a combination, a merger of 5G Networks, which is a licensed telco that owns and operates infrastructure across Australia, data centres, fibre networks, and its own private cloud. And we also service a lot of corporate clients, around 12 offices with 90 odd field techs who go out and do sort of break fix for IT work. And then so that listed in 2017, and then Webcentral, which a lot of people might know, the old Melbourne IT. Webcentral's been around for quite a while and had a few iterations. We took control of Webcentral in October 2000, and since then we've done a merger of the two businesses. If we can just go to the next couple of slides. Yep, thank you. So basically two components to the business. The Webcentral part of the business is 330,000 customers. We manage over 500,000 domain names across. I guess it's that SME marketplace. Mums and dads businesses. We provide email services. We provide website hosting. We do some digital marketing. And then the enterprise part of our business, which is the 5G networks part, we're servicing, high-end clients, like we host McDonald's website, and Event is one of our clients, Fairfax. So we service a number of governments, state government clients, some of those high-end enterprise clients, and then also we resell our services to wholesale managed service providers, and then end user corporates. So they're sort of the segments, the two parts of the business. So cloud is just your traditional cloud hosting, whether that's hosting applications or websites. Domain names, as everyone knows, your .com.au or .net.au or .com. Managed services is, as I said, the 90 techs around the country who go out and fix IT, install equipment, provision laptops and servers and networking equipment on site, or we also service those customers remotely. We have our own fibre network, about over 100 kilometres of fibre. We connect about 50 data centres across Australia, and we sell those services, whether that's a dark fibre service or a managed service. We've got 5 data centres across Australia, so one in Adelaide, 2 in Sydney, 1 in Melbourne, and 1 in Brisbane. And we also sell hardware and software that goes with that, and some project work. Profitable business. This financial year, we've given guidance in the range of 17 to 18.5 million EBITDA on revenue of just around 100 million. There's a little bit of delay or impact from supply chain issues with getting hardware delivered and the timing of that. So there's, at the moment, we've probably got, we're down on revenue by about $1 or $2 million, which is just waiting on the delivery of the hardware before we can invoice for that. But if you look at our exiting EBITDA run rate for March was 1.5 million, and our net operating cash flows 1.2. We've got some leases that we're exiting over the next couple of months, which will save us another couple of $100,000 a month. So really strong business, strong profitability, real annuity base. So with that sort of mix of customers, across various products, it's really steady annuity-based business. So it's performing well. We've got some growth areas. So if we just go to the next slide. So some of the, as I said, they're the guidance and the revenue and run rate, just reiterating those, strong cash flow. Some of the new exciting things that are happening in our marketplace is the launch of .au. So you can, you don't need webcentral.com.au anymore. You can just have webcentral.au, and I'll talk a little bit more about that in a minute and the benefits of that. As I said, we've got over 500,000 domains. That generates about 22 million of revenue. So the launch of the .au is really growing that same market. We expect customers to buy both domains and keep both domains, and then we're expecting that we're targeting internally around 150,000 .au domains, over the next 12 months. We've already surpassed 18,000. We've done a cleanup of our share registry through the merger of the two businesses, and we've removed we've 16,000 shareholders. We've reduced that down to 11,000 now, so that'll clean up some of the selling. And the board is just reviewing our capital management policies around potential share buyback and dividend policy. We'll talk a little bit more about that in the future. Over the 5 years that we've been listed, we've done 12 acquisitions. We've got one in play at the moment. We own 18% of Cirrus Networks, which is a more high-end federal government, state government, mining focused managed service provider. They sell a lot of hardware and install those solutions, but they don't have the infrastructure or add the value that we do. So we think that's a target. We did an on-market takeover last year, but we're unsuccessful to gain board control. So we're just evaluating that investment. Let's go to the next slide, please. So what's the benefits of the .au domain? Certainly, if you're a corporate business out there and you want to maintain your trademark or your brand, you don't want, if you're bellpotter.com.au, you don't want someone launching a website of bellpotter.au and then trying to sell corporate advisory or brokering type services. So there's real benefit in protecting your brand and your trademark. The federal government's come out and said that it's actually now important from a security perspective. So again, we've all seen people, try and spoof your email account. So it would be quite easy if we drop the .com out of an email address and just had the .au. It'd be difficult to notice if the rest of the website, the email address, looked very similar. And certainly something that Webcentral is taking advantage of at the moment in supporting the .au launch. We dropped the .com out of our domain name, and so we're just webcentral.au. But what we found is that our search or our organic search, where Google rank you on a search. So if someone's buying a domain name and they're searching, domain names Australia, then we would normally rank on the first page for that. We've seen a reduction in where we're ranking and lost a whole lot of rankings by changing the .au. Now what we've seen after just 3 weeks is that we're now ranking above our competitors. So Google will rank or give more credence to any Australian company. If someone's doing a search for an Australian product in Australia, and they can tell that from your IP address, and you've got the domain name .au, then you will rank above your competitors .com.au every time. So, for us, that's fantastic. Our largest competitors are GoDaddy and Crazy Domain, and they spend, significantly more on digital marketing than we do and have a lot larger budgets. But we're now seeing that we're ranking above those competitors because we've changed to the shorter .au domain. So certainly if you're, an Australian business, it's a handy tip to go and grab the .au and get it changed and migrate it over so that you'll benefit from those organic searches and you're not having to pay so much. We've also seen a reduction in our cost or our spend with Google for the digital marketing. So there's 3 benefits of why you'd want to adopt the .au and move across to that. As I said before, we also have the Melbourne IT brand. The Melbourne IT brand is more of a high-end business customer, we provide different support for those services, but generally it's priced sort of 3 to 4 times higher than the Webcentral products. But it is a different level of support for more corporate-related clients. Next slide, please. So just to reiterate around our infrastructure, and I guess we're a domain hosting email company to consumers, but we're also backed by a telco. So we've got our own infrastructure. We have plenty of capacity, direct capacity into LA, Tokyo, Singapore, New Zealand, and high-speed 100 gig links into every capital city in Australia. And we host our clients' websites in if you're a Perth business, then we host your website in Perth, and we provide high-speed access to that website for the best quality and redundancy. So we're not a backyard web hosting organisation, which some of our competitors are, or they use international providers and might host the websites in Singapore or somewhere else. So next slide, please. This is just a forward-looking forecast of where we think we're going. So through the journey of our business, we've been able to not only grow revenue, but grow our EBITDA percentage. And again, for FY23, we're looking to, get to around that 23% EBITDA margin on revenue of about 120 million. As I said, we've got a number of direct products that we're launching. We've been able to improve our hosting sales since we've acquired the business. So normally we would host about 8% of our domain names. We're now seeing an increase of that to 25%. So we expect a real increase in revenue from our hosting. Obviously, the launch of the .au, as I've shown, some of the numbers and where that we think that can grow to. And then some of our corporate products, our CloudPort product, we're launching, and that's going quite well. We're selling dark fiber, as I said, into our data centers around Australia. And that's, we just see demand constantly growing for that. Microsoft have said to be spending, building another 100 data centers worldwide, over the next couple of years. So certainly significant demand for cloud capacity and connections into those DCs. Next slide, please. So if I just, we've provided this guidance a little while ago to the market as to where we're going. So there's 6 monthly targets. We're launching our NBN product. Again, we're a telco. We've got plenty of telco capacity. We've got our automated billing systems, and we also provide support for our hosting domains and emails. So to bolt on an NBN product just fits nicely with the solutions and services that we offer our clients, and we expect to see a sort of 22% margin on our NBN services. And then we've got some organic growth that's coming through. We've done some realignment of products, and therefore we've been able to increase some of our margins on some of our core products, which is driving some of that organic growth. We just go to the EBITDA, the next slide. So you can see there's, like I said, we're between that 17 to 18.5 million EBITDA for this financial year, and rising up to 28, around the 28 million EBITDA for the following year. So at the moment we're sitting on a multiple of about 5 times, which is really quite cheap in the telco sector. Next slide, please. And as I said, the exited run rate for March was 1.2 million of free cash flow. A lot of our CapEx spend is now reducing as well. We spent a lot of money, about $6 million, on building out our fibre network in Melbourne, Sydney, Brisbane, and Adelaide, and expanding our infrastructure capacity to bring on some of these new products as well. So we expect that to drop off. So we'll see a lot of cash flowing through to the business, and that's why we're looking at what we do around dividends or share buybacks. It's certainly at our current valuation. Next slide, please. That's it. Thank you, Tim. Thank you, everyone.
Thanks, Joe, and apologies for that introduction. You'll be pleased to know that we are a client, Joe, across our domain names.
Well, you need to get your .au so you can.
Well, I was looking at that before we did our homework. So, I mean, why would we do that? Is that more to protect the brand as these domain names move into that .au? And
yeah, so there's a trademark protection there, absolutely. I mean, obviously you've got some other legal, people. You can't actually. You've got a 6-month period where if you've got the .com.au, then you've got first entitlement to the .au. From the 23rd of September, it's a free for all. So anyone can go and register a .au if that .com.au guy hasn't claimed his .au. So you've got a bit of a window. So there's brand protection. As I said, there's security related protection. So again, you wouldn't want someone registering the domain and then start sending emails to your finance people to start, paying suppliers, and all they've done is dropped out the .com in that email address. So it's quite hard to recognize. And then the third one is, quite frankly, it's a free kick, especially if you've got US competitors like us who may not be onto the change as fast as we have been. That organic ranking, especially if you're a digital business, if you rely on leads coming from that Google search, then you'd be jumping on this straight away. It's the first category or the box they look for is the domain name. Doesn't matter what you're doing with meta tags and content and writing blogs and all that sort of stuff. If you've got that .au, you'll rank above your competitors that are on the .com.au.
Like you said, that's a good annuity business for you. We'll go and do it. It does make a difference to our bottom line, and it's a great business. In regards to your product suite, where do you get your highest margins?
Yeah, so all the and again with our acquisitions and where we're trying to grow the business, it's not anything that's on our infrastructure. So think of cloud hosting, 80, 90 points of margin, incremental margin for any new customer we put on there. On our fiber network, it's the same 80, 90 points. Data centers are around that filling up our data centers about 70 points of margin. Managed IT, that's a labor sort of business. So you sort of 30 to 35 points of margin. Hardware and software is about 10 to 12. So, that's how we focus the business. And when we either look at organic growth or acquisitions, we're targeting those high margin areas or businesses that are going to deliver us those high margins.
And to close this kind of valuation gap that you've perceived compared to your competitors in the telco space, what's your preference between dividends and share buybacks, and what sort of payout ratio may you consider?
Yeah, look, I'm, probably a selfish view. I've got 16% of the company, so I'm certainly chasing dividends. And I think it rewards all shareholders, right? I mean,
yep.
I love the Dicker data model. He pays his staff or his senior staff in dividends, and he just doesn't take a wage and takes a dividend. So I think, there's some of the brokers come back from the US, and some organisations over there are paying quarterly dividends. So, I think there's a bit of space to be played in that. Look, we'll definitely pay a dividend. I'm not sure the size. A 1 cent dividend, for example, is, only $3 million. So a bit over $3 million. So, we've got some capacity there to start looking at that, and we might be a bit creative around how we do that.
Great, Joe. That's all we have time for. Really interesting story. We're a client. We like your work. Thanks again.
Thanks very much. Cheers.